back for a second time to the Scottish Property Podcast. Mark Shanta, Shanta Residential. How you doing?
Not bad, Nick. Thanks for having me.
And thanks for joining us for our very first in-person since post-COVID Scottish Property Podcast.
Are we live streaming this, or is it getting edited
No,
and
it's not
going
live,
out?
but you know what? I had to actually put a pair of trousers on today. Usually I'm sitting in my boxer shorts in front of the Zoom screen. So this is we've got the lights, the cameras, the mics. So
The makeup.
We've brought in the big guy. We've brought in the big hitters for this month's this market update. So we're looking back on the month of February, see what's happened in the Scottish property market. So pulled out a few stories for you today, Mark. First of all, how's business? How's sales? How's lettings?
It's been really interesting. We've had a good start to the year for both sales and lettings, but there's been a lot of turnover. I know we're going to touch on this later. There's been a lot of turmoil. We've had a lot of landlords come to us and say, I hear about this, the rent freeze and eviction bans ending. We want to sell. So we're just dealing with that, speaking to an individual basis. But as aside from that, the sales market's actually been pretty good. It's actually picked right back up. After in October, when the Liz Truss mini budget came in, it was an absolute disaster. You know, we had all of that. We had the interest rates rise in November and December, right across the board in Glasgow were completely dead. It was like the market, nobody was selling in the whole of Scotland, the UK, unless they actually had to. Like, why would you put a property in the market when we're going through all that turmoil?
Did you see a huge stall in the sales market at that point?
I think we would normally list between 10 and 15 properties for sale a month. I think in November and December we maybe listed 2 properties per month each, and they were the ones that had to sell because they were either buying or they'd given notice or the tenant was moving out. And
is that picked back up now then to that kind of pre-mini budget level?
Yeah, it's definitely the level of interest in the properties is not the same. You know, it's like pre-mini budget when base rate and all that was 0% and thing. You know, that you're listing a property and the majority, if not all of them, are going to closing dates. You know, you're sitting down at valuations and saying to people, without being blasé or cocky or anything like that, your house will go to a closing date and you will sell for 10% above home report value, because that's what's happening for about an 18-month period. But now the conversations are really different.
Just managing that expectations back down to market value price or whatever the valuation.
100%.
And we'll dive into more of that sales chat later on. But I want to kick off with obviously what has happened in the last few weeks. You know, Nicola Sturgeon, the resignation of our First Minister. I want to know.
That's why we're doing a gathering. That's why we're getting together to celebrate this.
You didn't even know about this.
I knew from your Instagram stories.
What, you didn't know she'd resigned?
He's been living in a bubble in an HMO in Aberdeen.
No Wi-Fi, no 4G.
No distractions.
They don't get
just next stories.
So obviously Nicola Sturgeon resigning came as a bit of a shock, but obviously she has been kind of like put up there as the kind of target for landlords in the last sort of few years because of all the legislation that the Scottish Government have been bringing in and all these bills and policies. Now, I think it's a little bit unfair to have this headline here, how Nicola Sturgeon destroyed the Scottish buy-to-let market. I think it's a bit unfair, although I'm not a huge fan. But obviously she's the one that's actually standing up there, delivering the policies, making the announcements. When we had the rent cap, the rent freeze, when we have the eviction bans, when all these things and these emergency bills get pushed through, she's the one that's delivering them. So everyone's like, oh, look, she's done it again.
Yeah.
But it's not really. If you look behind the scenes, you've got a lot of it is getting pushed by the Green Party and all the rest of it. But let's just kind of review her. I think it was 8 years as First Minister.
The longest reign as First Minister, wasn't it?
Yeah, the thing that I'll say about, I know we're not here to just bash Nicola Sturgeon right off the bat, but a lot of it all started with the UK-wide policy, like the non-devolved power to Scotland, where they brought in Section 24. That was the first.
George Osborne, 2015.
That's right. That was the first sort of oh shit moment for landlords, when they're like that, oh, we're not going to be able to write off our interest. So that came up to Scotland, obviously, and then after that was the introduction UK-wide of the 3% additional dwelling supplement. Now, they were UK policies, but where we've gone differently in Scotland is we've introduced, Scotland then changed it from the 3% ADS to 4%, and now just recently we've changed that up to 6%. So if you're a landlord and you're looking to buy or another rental property, you're paying 6% additional dwelling up here compared to 3% in Newcastle, or down south or anywhere.
Which might be similarly priced properties. And I know you can say, down south, London, it's going to make a huge difference, but northeast of England is going to be similar priced properties we've got in Scotland, and we're taking a double hit on the tax we pay on the purchases.
Yep, 100%. But then the big thing that we did up here was we brought out the rent freeze and the eviction ban. And that's coming to an end in March. But what's happened is it's scared a lot of landlords, because what landlords don't like is they don't like uncertainty. They don't like uncertainty meddling in a free market where they're thinking, well, the Scottish government, what they've essentially done is they've come in and they've said, right, we're going to freeze the rents here. We're going to ban evictions here, and that is, even though it's coming to an end, that scared landlords, because landlords are now at the point where they're like, this could happen again. Do you know what? This could happen again.
And see if you look at that, like say that 2010 to, I don't know, 2020 even, rents didn't really go up by that much. And then this happens, all this stuff in the last couple of years, rents are absolutely spiraling out of control. The other thing you mentioned there about putting landlords off buying in Scotland, it's also the bigger picture of they're trying to push the whole build to rent sector, this mass investment of big pension funds, institutional investment from down in London and that, building these big blocks. Yes. Apparently, that a lot of those developments have been put on hold.
Well, this is, now you're touching on that, Nick. There was an article in November this year that said Willie Hawkeye had planned to build 11,000 affordable homes up in Scotland. 11,000. Now, bear in mind, we've got a waiting list up here in Scotland for social housing of over 100,000 people. He went to Vienna, he went to Toronto, he went to Philadelphia to look at similar schemes. And what his plan was, it was reported in the papers and there's articles about it, was these affordable homes were going to have affordable rents, $695, including bills. And he was proposing to come up and do this here, and they planned to do it. But in November, he announced because of the rent freeze, and the other reason was because of the cost of extra material, he's put that on hold. So he's obviously seen interference in a market in Scotland. And this is a billionaire who's doing this 11,000. It's not to make money, it's to help. And he's put these plans on hold, and it's totally backfired, And
will that affect investment into Scotland, do you think, then? Foreign investment, people, like say, if people see the meddling and the uncertainty in the political landscape, will it put them off investing in the country?
Yeah, I mean, I'm not an economic expert by any means, but I don't see how it could help.
That's how you pulled in, mate. Get out of here. Next guest.
No, but I don't see how it could help.
Yeah.
I genuinely don't see how it could help if you're having that sort of outside interference by the Scottish government. Why would you look to do a scheme like that here? When you could go down south?
It's business wide. A lot of business people like Willie Hawkeye, because I listen to his podcast, and he's saying that the Greens and the SNP have been terrible for business lately.
Yeah.
Looking, and it's not a politics show, right? But I think that we need to look at it because these are going to be big influences on our sector, this political stuff, and the next leader, the next First Minister. So I know you keep an eye on things. We've got a wee chat going as well, a wee politics chat going. But
sounds riveting.
Looking at the three potential candidates, right? You've got Hamza Youssef, Kate Forbes, Ash Regan, Ash Regan, right? So what was promising to me was Kate Forbes and Ash Regan. They're not willing to work with the Green Party?
Well, I mean, I looked this up before I came on because I thought we might touch on it. Kate Forbes has said that she will look to continue the agreement with the Greens.
Right.
However,
how do they have a choice? I don't know. Excuse me if this is ignorant, but how do they have a choice if this has been voted in that it's a coalition government between the SNP and Greens? How can they?
So it's called the Butte House deal, and it was formed between SNP and Greens to bring up the SNP's majority so that they could vote policies through. Mm-hmm. But what Kate Forbes has come out and said is she would look to continue with that.
All right.
But there's a bit of people are thinking out there because of her other stances that the Greens may not want to work with her.
Against the same-sex marriage and all that.
Exactly.
And her religious views, basically.
So Hamza has come out and said that he is the only one. He wants to ensure that this deal with the Greens continues, and nobody really knows about Ash Regan, but what she said is that there's no guarantees that she's going to work with the Greens. Right. So she's actually the more likely one to end the deal with the Greens. However, she's the massive outsider. It looks like it's between Kate Forbes
and why are the Greens, look, basically for those landlords and property investors, listen, why are the Greens like important, you know, in government? Because they have been thrown their weight about in terms of the tenant rights.
And because without them, the SNP won't have a majority, so they can put bills, they can propose bills, and if they've got the Greens agreement, they'll get them through. For
and
example,
they're so anti-landlord. I mean, let's face it. Yeah. You've seen that guy like Ross Greer, Patrick Harvey, you know, all the rest of it. We've actually asked them to come on, but we've not had any luck yet. Trying to get them
politely declined.
But I mean, they're so anti-landlords. They just want to do away with the whole private rented sector altogether.
But I think we chatted on this off air, Mark. How can they do with the private rental sector? Because you've got notes on, you know, what they've fallen behind with the amount that's on the social housing list, how many houses were fallen short of building.
Well, the one thing that I noticed when I was looking at things, there's 67,000 unoccupied or empty homes in Scotland. So for me, if you're looking at 100,000 plus waiting list and you're missing your house build targets, why are we not looking as a country to bring in a scheme and some sort of help to bring these already built homes on? That should be priority, in my opinion, along with trying to meet the new build targets. Either that's government new builds or trying to incentivise private new builds. But we've already seen just what we mentioned about Willie Hawkeye, about him stopping the scheme because of the outside political interference. Mm-hmm. What is interesting, or may or may not be interesting, but what's pretty worrying for me is there was a report out that this exact time last year there was 3,000 more rental properties available on the market. Do you know, that shows you what we're up against. And Nick, obviously you're a letting agent, you'll see it.
That's a good point. I mean, that's a very good point to transition onto our next story about, you know, landlords exiting, reducing the numbers of private rented stock on the market, increasing the rents because there is that limited stock. Because if anything, the demand's going up. So we're looking at this next article and it says buy to let bust sees 66 rental homes disappear each day. So this is an article that's basically that's UK wide stats, right? So landlords sold 35,000 more properties than they bought across 2022. Like you say,
that's a huge hit on the market.
Yeah. So let's look at it like you say. You know, we're both letting agents. You know, Stephen's in there looking at. He's potentially looking to seize the opportunity. He's taking the opportunity, buying up these. Distressed landlords.
The last time I came to the Glasgow Scottish Property Podcast Networking event, I think it was the day she announced about the rent freeze and the eviction ban. I'm sure it was, and everyone was like fucking right doom and gloom. And I says, well, you know, I viewed a portfolio a year and a half ago, and they just accepted my offer. Like 18 months later, it must have been like the final straw. I thought, fuck this, dealing with this constant interference, and it was an offer accepted. So I do see the opportunities in it, but looking at the statistics as well, there's going to be huge amounts of landlords just exiting the market, which isn't going to help with the shortage that you're talking about, Mark.
But what where it's not been thought through correctly is all the policies are working towards a landlord shortage, but in a market where there's no rent freeze on properties that are unoccupied. So what's happening is tenants are giving their notice, and the landlords that are staying within the industry, what are they doing? They're seeing that there's an opportunity because their costs are rising as well, but because there's a over demand and under supply, the supply and demand curve goes up. So they're increasing their rents as much as they can.
So I've had 3 landlords in the past 2 weeks. Now, we don't operate a huge, it's not a huge number, 180 properties that we manage. 3 landlords in the last month, I would say, have said that they want to sell. Have you noticed any?
We're the same, yeah. I mean, I think we've maybe had, this year, I think we'd probably have about 7 or 8.
And what are the reasons that landlords are selling up then? What have they, sort of reasons have they given you?
It's no longer viable. It's no longer their costs are going up. They're worried that in between tenancies that they can't rise with the costs, that their costs will go up. They're obviously Section 24 is now
tax reasons.
The tax reasons are fully
especially
coming in
if you're an accidental landlord, or you bought in 2008 and you've only got 1-2 properties. It's just not making sense anymore.
You had your portfolio prior to Section 24 would have made sense to have them in your own name.
Yeah,
they'll be the ones that will be getting hit the most.
It does tend to be the more, as Nick was said, the accidental landlords. They tend to be the ones that are selling. It's not the structured buy-to-let company portfolio guys that are selling. They're just seeing this as a speed bump in the road, and actually they're seeing it as an opportunity where there will be an undersupply and the rents can go up.
Mm-hmm. I mean, the other thing, the reason I've had lately of a landlord selling up is because the mortgage payments. So because the interest rate's going up, he was on a fixed rate deal that's come to an end, and it's gone up hugely, dramatically increased to the point where he's hardly making anything. So he's like, this is just not worth it anymore.
You spoke about this before, Nick, on the podcast, where people will pay, because the interest rates have been historically low for so long, people pay attention to the cash flow, but they don't look at it. Well, if your property price went up 8% this year, that's $8,000 a year, $10,000 a year, that's X amount per month. They're just looking at it from this cash flow that's dropping in short term, not looking at that bigger picture of the capital appreciation on the property. Do you think that's where people listening to might need to look at the bigger picture rather than just the monthly?
I think, again, it's if you've got a portfolio of 10, you can spread. So he was looking at say example, a boiler went or something like that, and he's just breaking even. Automatically you're in real negative.
Yeah.
And what's the point then, really, you're forking out to keep this. I know it's an asset and it will grow in value over time, but then, at the moment we're in a bit of uncertainty about the market and where prices are heading as well. Mm-hmm. And you feel, this is where I struggle with it, right? Because obviously I do my job as a letting agent. I give the notice to the tenants and all the rest of it.
It's horrible, isn't it?
Exactly. Yeah. There is a real, it's hard because these people have been in that house. I'm talking about one particular house. They've been in that house for 6 years, right? They've actually ploughed quite a bit of their money into it as well, into their own money. Now, I get it from his point of view. It's up to him. He's the landlord. That's his right. He can sell, but that's that family's home as well. And what are the chances they're going to find something else now in this market
with
as
the
well?
Shortage, but before the rent freeze came in and the new 3%, now you can increase rents from the 1st of April by 3% in a particular year. Now, if in your case, if this is a £700 a month rent, you can then increase that to £721. Your landlord's like, well, my costs have actually gone up because of this new base rate. My costs have gone up by £250. It's this 3% is just not cutting it. I have to, if I was to continue renting this property, I would have needed to increase the rent by significantly more than that to sustain that. But he's not able to, so he's forced to sell.
Forced selling.
And so he's now selling that property. And to me, that's an example where capping the 3% increase is quite short-sighted, because you're essentially forcing a landlord to give notice on this property because he can't increase the rent, and he might not have increased it the whole amount.
Which is surely going to add to the problem, the social housing shortage, because like the example that Nick gave, if they can't find a stock on the private rental sector, they're going to go to the council and like, can I get added to the list? Well,
join the 100,000
join the 100,000 people that are on the list. And I don't see the why they don't look at that picture as a wider picture.
Another thing is that all the policies seem to be towards pushing landlords out of the market. And I just feel that it's not considered that not everybody wants to be a homeowner. Do you know, like in Glasgow, there's something like 80,000 students. So all these students need to come, they need to go and live somewhere. They're not wanting to come down and buy a place in Glasgow, or their mum and dad's buy a place in Glasgow for the 2-year course or the 4-year course or something like that. We're a transient community, like people move across and they come to Glasgow for jobs from down south, they come from overseas. Not everybody wants to be a homeowner, and if you're shrinking that private rented sector so much, where's everybody going to stay? Do you know, like,
I mean, we must, like, especially, you'll see this as well, like city centre properties and that. I'm sure it's the same in every city over Scotland. You know, we put something up, a nice modern, you know, apartment in the city centre. I would say probably like 80% of the applicants are probably overseas.
Yeah.
Indian IT workers, they're earning really good salaries. They're in the finance sector. You know, that, like you say, they're not going to buy. They're not going to buy. So, like, they need the private rent.
But they'll pay the inflated rent, which will force out the locals.
100%. And the other issue is, and I know that none of us are experts on it, but I know you've had the guests on talking about it, is the new policy on the short stay and the Airbnb. Like, they're really clamping down on that, and they're almost forcing these guys out the market as well. So you look at something like COP26, or when, you know, Glasgow had an influx of people, and we were able to put on that event because we were allowed to do Airbnb. You know, if that was to happen again, it wouldn't be possible. We don't have the infrastructure for big events like that. Yeah. Like, you know, they were going for Eurovision, and if they do that when the new Airbnb rules are out.
And do you believe, like, I mean, like, obviously the argument from the politicians, especially ones like the Green Party and all the rest of it, they you know, they're saying that is the Airbnb and the short-term accommodation that has had the impact on, you know, why rents are so high, why there's a shortage and all the rest of it. It's not because, you know, landlords are getting driven out, it's because they're switching their properties to Airbnb and all that. Do you think that's... I don't think it's had a huge impact in it.
I don't think so. I mean, there certainly was a time where, you know, over the last few years, not all the Airbnbs, there wasn't the regulation there wasn't the regulation with the Airbnb market as it was with the same as the private rented sector, our sector. But I do think that you need both as part of a housing plan. I think you need a strong social sector, you need a short stay, and you also need a private rented sector. And to me, it doesn't seem like we're getting any of them right just now.
Yeah. Okay, well, let's go on to our third article. So the headline is UK home sellers have to cut average of £14,000 from asking price. Again, this is a kind of, you know, a headline grabber, and it's you've got to be careful with all the data, because usually they take the data UK wide, right? Yeah. And we know that we've got to look really into the kind of home in on the specific, you know, geographical locations to really get an idea of what's happening. That's why it's good when we get likes of yourself in here. You can tell us what's going on in Glasgow specifically. But the general trend, they reckon, is when they've looked at, you know, Zoopla listings that are coming on, they're saying that more than 40% of homes currently had listed for sale had an asking price that had been lowered to attract price sensitive buyers. So they're saying that basically there's a lot more reduced properties on the market. So would you tend to agree with that, or what are you seeing from you're an estate agent? What are you seeing
from the market that I look at, like Glasgow South, Glasgow as a whole as well? You do see a lot more reduced properties than you did in the last 18 months to 2 years. So, like, just as we were talking about previously, the majority of stuff in the last 18 months would just go to a closing date, whereas now properties are selling more towards the home report value. And I think maybe the reductions are coming because now you've got 18 months to 2 years worth of really inflated data on the land registry. You know, that 2-bedroom flat that used to be 200,000, there's 5 or 6 comparables in the same street now at 240 or 250. So home report values are coming back 230, 240. So the home reports are getting higher and sales are either selling closer to the home report value or they're coming down a bit because they're seen as overpriced.
Just that the bit of hotness that's coming out of the market, the inflated prices that we saw the last year.
Yeah, you see all that data on the land registry, you see the actual sold prices, and you see, you know, that 5 or 6 in the same street at 250. Why would you get a home report of 200 now when there's some actual evidence?
I was saying to guys the other week on the Massman call the same thing. Like, when you're looking at comparables, be very careful when you're looking at that, because
100%.
if that is a 240 grand flat that had a home report of 200 grand a year ago,
That's
your
not your
comparable is
comp.
not 240 grand anymore. That was a 20% over the asking price. It might go to 205 or 210, but
100%.
be very realistic. And I suppose that's where, when you're starting out, go in your local area where you've got experts like Mark that's like seen sales and lettings at a micro economy level to go, no, that's not a 240 grand flat. Yeah,
that's not your end valuation. Your end value, you should base your end valuation off that.
Yeah,
be the 200 or the 210, like add a wee bit on, but not.
And
too
is
much.
there quite a gap between, like, obviously, like, you know, the seller's view and the buyer's view in terms of, you know, like, my neighbour sold 6 months ago
100%.
for, you know, 200,000 or something like that.
too late.
Aye. And then, you know, so they're obviously wanting that. Then you've got the buyers coming in. They're obviously keeping an eye on what's going on in the press, seeing that things are
100%.
slowing down in the property market. And then you've got the likes of us coming in offering 25% below market value. again.
Minus the new 6% ADS.
Yes, but that's the sort of thing you've got to, as an estate, when you're out being an estate agent. Like, our policy is always be upfront and honest with people and say that, look, that was the market then, it's not the market now. And we'll definitely lose listings to people or agents who go out and say, oh, we'll get you this.
Yeah.
You know, we sold that one down the street for this, we'll get you the same. And then in 2 months' time, you've got a really annoyed client and you've under-delivered for them, you know? So,
Yeah.
So, I mean, in terms of yourself, Stephen, up in Aberdeen, like, what's happening with the reduced prices up there? They're just always reducing.
No, it's going the opposite way now. Is it? No, it's going the opposite way. They're actually starting to go for nearer market value, which is nuts to see. So it's good.
Which is good when you come up for your refinancing and all that.
Well, depending on the rates, but yeah, it's good for when I go to sell them, because there's an opportunity now to trade some properties and sell some in the portfolio that we bought, you know, a few years ago that weren't looking that attractive, but the numbers worked out at the time. So yeah, but I mean, all these articles that we're talking about, it does create opportunities. But we were chatting about it, like, who's buying them? Because the ones that have got a very slight discount, if anything at all, who's paying that plus a 6% ADS and getting capped with a 6% yield, like, and, you know, high mortgage rate costs? Like, it's just a standard buy to let sitting on the market at market value just doesn't look like it stacks up anymore for me.
You're an investor yourself. You got your own portfolio as well, Mark. What is your view at the moment in terms of buying? How are you actively looking to add to your portfolio? Like, since all the craziness with the obviously Liz Truss and the mini budget, are you sitting?
No, I don't think it's not as black and white for me. And I know you're probably the same. It's not as black and white as, I'm not buying just out, or I'm being aggressive and looking to push. It all very much just comes on what's available. You know, if there's a good opportunity to buy, then I will. We're doing one just now. Myself, my partner Ross, we were talking about him earlier. We're doing a renovation. I know, what was the word you guys called it in the last podcast? The BRR, but Lewis came up with a different word for it.
Oh, he did, yeah.
I can't
put you on the spot. He came up for a different word for it, and you're like, that's a better word for the BRR.
I remember him saying it now, and I can't. Oh man, no, it was quite smart. He was a smart guy though.
But what we're doing is, we've bought one just now that we're renovating, and we're changing it from 1 to a 2, and then we're going to refinance, and we'll take the extra hit now on
higher
mortgage costs, but the rent has gone up, which because it's vacant, we can set the rent level that will cover the mortgage.
Yeah,
so that's fine. But we're not. It's not black or white. It's just, if there's a good opportunity, then we'd look to do that.
Yeah,
it seems like, speaking to most investors at the networking events. Like I've travelled quite a bit to I've been to Glasgow, I'm in Dundee this Wednesday, I was in Aberdeen last month, like just to see different investors and what they're looking at, and most are kind of sitting in that same position going, I'm still buying, I'm still looking. So the ones that are serious in the market and have been in the market for a long term are just looking at it from that bigger point of view, going, yeah, there's 6% hit on it, but we'll just factor that into the numbers, and if it works for the criteria, we're still going to go ahead.
It's the best way to be, isn't it? Because you're not putting your pressure or stressing yourself to buy something that may or may not work.
Yeah.
If you're saying, look, we'll do something if we think this is going to be a slam dunk or it fits our strategy or model, or
dictated from outside sources, like we're looking at, all these outside influences in the marketplace. If you're, I suppose, a proper investor, you're just factoring all this stuff in and going, well, I'll ride with the punches. I'll roll whatever's happened right now.
Agreed. 6% is definitely a slow one though, especially if you're buying at the higher level, because if you like, I spoke to somebody this morning, they bought a 300 grand flat in Finniston or something like that. Now, why you'd want to buy that as an investment, I wouldn't really know in terms of, well, capital growth maybe, yes, if you're looking at that, or you want it for your kids staying at uni or whatever. But I kind of did a quick figure on the ADS that you'd pay on that, the 6% plus the LBTT, you'd pay about 30 grand. In tax. Do you know what I mean?
Do you know, you asked me earlier about the demographic of landlords who are selling, and that brought to mind, we've had two where it's been similar, where it's been one landlord, they've moved in with their partner, they've rented their property out, and then them and their partner are looking to buy another flat, and because they already own this one property that they're renting out, if they then go and buy a house with their partner at 400 grand or something like that, so, you work out the numbers, and that's an extra £24,000 just to hold a £100,000 flat.
I had a call, and I suppose it's, but I keep turning back to like the professional investors look at this, understand the rules, understand what's happening in the marketplace and play to their strengths. But I had a call last week that just kind of showcases that very similar situation. Then they're phoning you up saying, I'm desperate to sell my house now. Why? Well, we're going to keep it and rent it, but we didn't know about this ADS. Now we're paying, I think it was similar numbers, like 25, 30 grand extra that they hadn't factored in because they have no idea about it. And they were like, shit, we need to sell this flat now. So they can take a hit almost on a bit of a hit on the flat to sell it.
Brilliant. Well, guys, I think we've wrapped up there. I appreciate your time, Mark. We appreciate your time. Thanks for coming. So prepared as well, as we notepad and all that, and his haircut. It's like your first day at school, mate.
Fail to prepare. No, fail to prepare. You prepare to fail. And all the football coaches tell me that.
And who will you be voting in the next general election then?
No comment.
If anybody wants to reach out to Shanta Residential to use your services, how do they get in touch?
Just mark at shantaresidential.co.uk. We're on Instagram and Facebook.
Glasgow's second top letting agent.
Second top estate agent, second.
Brilliant, mate. Thanks very much for taking the time.
Guys.
Thanks a lot, Mark.